Colin, Kelton, nice to see you. You're the CEO of Vanguard's business here in Australia after many years with Vanguard in the US. When the Vanguard business started and really pioneered indexing back in the 70s, it really was a slow start. Fast forward to today, and an enormous proportion of people's savings are in index funds, whether it's with Vanguard or others. Is it still relevant today? And should people have a high proportion of their money in an indexed approach?
I think it's absolutely relevant today and should continue to grow. It gets a lot of press, and there's been, especially recently, in the Wall Street Journal, for instance, there's a whole series of articles on passive indexing investments. But it's still actually not the predominant. It's getting largely the flows.
So what proportion of flows is it roughly?
I think in the US it would probably be 80-90% of the flows, and I'm not sure about the Australian number because with us it's almost 100% of our flows, but I'm not sure what it would be overall. But it's still, the active management still, just from a pure asset standpoint, beats passive. So I think there's a lot of room for it to grow, and we haven't reached everyone yet. And there's people that have various opinions. Vanguard has a very large active product base, especially in the U.S., and there's a place for that if you do it right.
And you're thinking about doing that in Australia, maybe?
We're thinking about doing that in Australia. We have a couple things. We have a couple already. They're more quantitative, active, and we're actually talking to our clients to say, if we were to do something, what would you want us to do? But we do it the Vanguard way, which is very focused, very low cost, and frankly, we force our competitors sometimes to lower their costs. But we think it's a complement for some people to indexing. It's not the predominant core. That should be indexing.
So I think some of the media attention, the Wall Street Journal and others, is around integrity in markets, and if so much of markets are index-based in terms of investment, do you have that sort of market mechanism to arbitrage opportunities and to have the market work efficiently? What's your view on that?
Yeah, we like to think that actually it helps the market work efficiently, and that there's certainly some arbitrage opportunities out there if people go looking for it, but it's really hard to find. But you'll read some articles and some people, and they usually have some reason for saying this, i.e. they have a business that is not indexing, to say, oh look, everyone's moving one way and the markets just flow because of this massive indexing. But in fact, indexing is this buy and hold mentality. So there's not a lot of trading that happens that necessarily moves the markets all the time when it comes to indexing. And so, it seems, at least in my mind anyway, there's a lot more room for growth, that we don't move the markets on a daily basis and act nefariously, if you will, out there.
The other concern that clients have is sometimes they'll have a large proportion of their own personal wealth with Vanguard. And our view is that there's a level of comfort with that there's not the same concentration risk that you have with an active manager, right, where you're relying on them making calls on certain sectors or making calls on certain companies. What do you say to clients when they say to you, look, I like Vanguard, but I've got so much money with them already, I should go somewhere else for my incremental index investment?
Right. I'd like to talk about, so what actually happens with the money? So Vanguard actually doesn't have the money. So Vanguard takes the money and invests it in an X number of companies and thousands of companies. That's actually where all the money is. So, Vanguard's not necessarily going to go away. And if Vanguard somehow went away, which, it actually can't, but if it did, the money's still invested in all of those other downstream shares. So the diversification isn't necessarily Vanguard. The diversification is what's underneath. If you give it to one firm and they have 30 stocks in a portfolio, that's highly concentrated. But when if you have one fund at Vanguard, 100%, but that's a broadly based index fund, you're actually incredibly diversified. The diversification's a level below, not with Vanguard. I clearly have 100% of my money at Vanguard, but I own, by virtue of the funds that I own, thousands of companies. That's the diversification.
One of the things clearly we like about Vanguard is they're very cost effective, especially those funds that give us the opportunity to leverage off the very big funds you have in the US. So some of the exchange traded funds here in Australia are incredibly cost effective. Do you think because you have a mutual structure that's different from some of your competitors that you'll always have that slight pricing advantage?
Oh, absolutely. It's critical to our strategy. So when we have money to spend, if you will, we really only have two choices. We can either lower the cost, or we can invest it back in the business. Other companies have a third choice: pay someone who owns them. We don't have that. So we'll split both of those things, and we'll lower the cost on some. Other will invest in the business. But we only invest in the business if we think that eventually that drives even lower cost. We don't invest in the business to think, oh, we're going to do this because it's going to drive cost higher. If it doesn't return and therefore allow us to do lower cost to our clients, then we don't invest in that part of the business. And so it is absolutely part of the structure, is constantly driving those costs lower.
And so presumably for the key people within Vanguard, the way they get rich is not becoming shareholders in Vanguard, it's by buying into Vanguard products and seeing the sort of long-term growth that you've seen come from.
You mean people that work at Vanguard?
Correct, like Jack Bogle and you and all of the, Bill McNabb, people who have been with the company for decades. Presumably you're not like executives who are repaid with options and share schemes in the company.
That's right. There is no such thing. So, our money is invested in Vanguard. We draw a salary. But it's nothing like others. And Jack Bogle once said to me, "Boy, if I knew how much money was in this industry, maybe I would have done something different." He said it jokingly, but it's all about the client, and the clients make money, and so we make money right along with our clients. The bulk of our assets, if you will, come from the actual rise in share price of the Vanguard products, not anything else.
Well, we really enjoy working with you, so thanks for spending time with us.
Thank you.